and welcome to Compounding Curiosity. I'm your host, Kalani Scarrett, and this podcast is all about compounding your curiosity alongside my own through thoughtful interviews with interesting guests. For transcripts and detailed show notes, check out the links in the description. Hopefully you're as keen as me to learn something new, so let's get stuck in. Alright, my guest today is Michael McGaughy. Mike is the founder and portfolio manager of Research Alpha, a specialist fund which invests in the equity of unloved and out-of-favour quality companies in some of the world's least expensive stock markets, like Uzbekistan, Argentina and Egypt, and plenty more off the beaten path. So in this super fun and illuminating conversation, we cover how he got started and interested in emerging markets, what investing in emerging markets involves, and we speak a bit about Uzbekistan and the opportunity there. So extremely valuable, fun and varied conversation for me today. I think there's plenty to take away, so please enjoy my conversation with Michael McGaughy. So yeah, Michael, cheers a million for coming on today. And a part I'd love to start with is a bit about your background, because for me, being young, it's interesting. So you first came to Asia as an exchange student in Hong Kong in 1985. So what prompted that? And yeah, how did it all start?
Well, I guess it goes back to just, I was working, I was actually directing President's one Christmas holiday at a high-end shopping mall outside of Washington, D.C. And, we used to have great bookstores back then and huge magazine racks, just as before the internet came in, obviously. And I happened to pick up The Economist and just started reading it. And I was just, so many lights went off in my head, bought the magazine, and I think I kept reading it just got me interested in what was happening outside of America. I was in university at the time, maybe a freshman. And in the US, we have typically a 4-year university career, I guess, for lack of a better word. And many people take their junior or their third year abroad. And most programs at that time were going to France or England, someplace in Europe. There are a few that went to Asia. And one of the only ones that went from the Asian programs, one of the only ones that you did not need to have a language background was the program in Hong Kong. And I noticed that the price was lower than, even including the plane tickets back and forth, which were pretty expensive back then relative to people's income. Even the plane tickets back and forth from Hong Kong to DC and the tuition, we'd still save money compared to the tuition I was paying my parents were paying at the university. So it seemed all around a good deal. I'd never really been out of the US at that point. It took a while to get the passport and things. And it was it's definitely a life-changing year. And for me, not just for me, but for other people on the program too. We still stay in touch with each other all the time.
Oh, cool. And you continue to stay in Asia directly after that and start working?
No. I had to go back and finish up my university program. And then I got a job in New York for a couple of years after that. And, I was spending so much time. I was working for Chase Manhattan Bank, which is, I forget who they're part of now. But I was spending so much time in Chinatown, and all my buddies who did stay in Hong Kong were doing pretty well. And I really missed the place. So I got a part-time job, saved up $1,000, spent $400 on a plane ticket, and arrived with $600 and started looking for work in Hong Kong in 1989.
$600 in a dream. That's all you need. That's unreal. Because you eventually ended up as a sell-side analyst in Indonesia in 89. So how did you make the transition from Hong Kong to Indonesia? And just what was that period like? Just talk me through it.
Sure. Well, it's kind of a little roundabout story, but I was actually hired as a China analyst in, I think it was March or April of 1989, which was just a few months before the Tiananmen Square crisis. And me and my boss, the head of the company at that time, I was working for a group called Crosby Securities, which, us and CLSA used to be the key independent research-driven brokers back then. We were due to actually take a plane flight to Beijing on June 4th, which is the famous day of the protest or the crackdown on the protest in the Tiananmen Square. And we were called back for the first time to ever use a cell phone. We were called back and told, don't go to Beijing. There's, all your meetings are going to be canceled anyhow. So I thought I'd be out of a job. You don't need to be a China analyst if there's no stock markets and there's no possibility of them opening up in the next few years. Luckily, about a month after that, in July of 1989, Indonesia opened up their markets for foreign investment, their stock market for foreign investment. And I was a new kid on the block, so they sent me down to Jakarta to start looking around and start kicking the tires. And so in July of 1989, I spent about a couple of weeks down in Indonesia. only 7 companies were open for foreign investment. There were only about 24 stocks at the time. But we met with all the 7 companies and started writing reports about them.
Wow. So how hard was the work back then, given it's only 7 companies? Like, was it the Wild West? I don't know. Yeah, just what was it a bit like that?
Well, at the time, I didn't have much experience in the markets. So it was, I just wanted to keep my job so I could pay my rent and get out of the cubicle where I was staying in Hong Kong. I was living pretty hand to mouth back then. So it was a tremendously good learning experience for me. I didn't really know much about the markets back then. I barely knew what stock was, to be honest with you, but kept my job and learned a little bit here and there. I didn't really have much to compare it to. So, and because I spent so much time, it wasn't hard work, but it was very different work than what we're doing now. A lot of the work was more collecting information and taking that information and putting it into a spreadsheet or writing it up, listening to rumors, following up on those things. You had a much more, a very good financial press back then. I remember I became friends. He's still a friend to this day, with the head of the Jakarta bureau at Wall Street Journal. And he had some really, really good insight into what was going on back then and things. So I got really lucky in terms of the contacts that I made in my first couple of years in the business. Maybe that's part and parcel of being one of the first, analysts in the market.
And yeah, if we fast forward a few years, I saw you spent a couple of years in the mid-90s co-managing a China private equity fund listed on the London Stock Exchange. So I recently read Tim Clissold's Mr. China, and I'm unsure if you've read it, but it's just a corker of a story about trying to set up and invest in businesses in China. So I'm just wondering, what are your memories of that period? And is it as wild as the book paints it? Like, what do you remember from then?
Yeah, that's a great book. I'm really glad you read it. Actually, it's funny, when I read that book, it came out, I think, 3 or 4 years after I left China. I literally had nightmares because it was so close to what I experienced, but just on a different level. But, I took over a private equity fund that the person that started the fund, or with the firm, he wanted to do something different, or he wanted to do his own private equity fund. So I had to rebuild the team in Beijing, as well as take over his investments, or the investments that the previous team made. And we found a few holes in them. And so I spent an awful lot of time, and this is what kind of reminds me of the book, is that one of the firms that we had invested in, it was a water heater factory in Western Shandong province. They basically management just took the money and invested it in something else. So I spent most of my time in Beijing trying to figure out the problem first, and then trying to recover about $5 million that the previous team had invested in the company, and management basically just embezzled. So we got the money back, but you're just back to square one. And it took an awful lot of time to do that. And meanwhile, other businesses are kind of suffering. It kind of just wasn't ready for private equity back then. It was very, very different. I think it was about 5 or 6 years after I left that Sina.com went public it's a VIE structure that was worked out. And that structure wasn't available to us at that time. But yeah, that book is very, very accurate.
Yeah, no, I just love the stories. And same thing, I was just like, surely this can't be real. But yeah, you read everyone else's stories, and it seems to, you connect all the dots, and it really was that crazy.
Yeah. There's another book that predates that by, I don't know, maybe 5 or 10 years, called Barefoot in the Boardroom. And it was written by a Westerner. I don't know where he's from, but he talks about working in a company in mainland China, in Guangdong province, very, very early on after China's opening.
Okay, I'll definitely get onto that. Awesome. And to fast forward again to the work you're doing today, so for Research Alpha, and given it's not a strictly emerging or frontier markets fund, but you've mentioned those markets tend to have more idiosyncratic financial and currency crises, and it's your background to look at emerging and frontier markets, so you're quite comfortable in that space. But how do you actually develop this comfort? Is it nature? Is it nurture? How have you become comfortable, I guess?
Probably just experience, the latter. I've been following Indonesia off and on ever since I was an analyst there in the late 80s, in the early 90s. And it's really interesting. And it's fantastic to see what's happened there, because you've seen such a small thing become a big part of the economy, and the openness and the transparency that comes with the stock market. I think there's a spin-off effect from that on the rest of the country, and vice versa. That also helps with valuations and more companies listed, and it's basically a very virtuous cycle. And it's really great to see that happen over the last many years. And part of that process was going through the Asian financial crisis. And, between 1997 and kind of really a lot of Southeast Asian countries didn't really come out of the crisis until 2001 or so. But when I went back and looked at how those companies did after the crisis, you just had phenomenal returns if you had invested during the crisis. So, in my present, I had our data provider run a back test for me, or just give me some information on all the 100 baggers around the world in the last, for the life of their database, which is about 30, 35 years. And in Indonesia, I think you had like 8% of the companies that were listed at the time. I think there were about 400 companies listed at the time. And I think about 35% or 35 of them became 100 baggers, according to this database. So that's 8% chance of getting 100 bagger. And then, some of the companies I looked at, one of the favorite companies, the companies that had really good corporate governance and good shareholders and good structure. I'm thinking here of Astra International. It was a really blue chip company. Everybody liked it. Great history. There became a 200 bagger over between 1998, I think, when it hit its bottom, to when I looked at the numbers in, I think, 2016, 2017. And that's not including dividends or dividends reinvested. So that's a company everybody knew about, blue chip company, one of the most liquid companies in the market. And that's all you really need over the last 25 years is to find one of those and stick with it and be smart enough to stick with it. So that's kind of, and there's another one of their subsidiaries, United Tractors, that was 1,000 bagger over the same time period. Again, not including dividends or dividends being reinvested. So just phenomenal returns and a high probability of finding something like that. So when you look at that data and, reading a lot of the behavioral finance stuff that I've read, you kind of put all that together and you say, I think you're taking a lot less risk than investing in, say, Sri Lanka now than you were, say, buying tech companies a year ago or 2 years ago, or buying, we bought Turkey in 2018 when everybody was buying tech. And that actually turned out to be a little bit of a safer bet. I think I'll have to go back to the numbers, but that's the kind of stuff I'm looking at. You buy when there's all the negative news in the price, but the underlying asset is still high quality. It basically gives you a chance to buy a high quality asset at a rock bottom price. And to me, if you have holding power, and no matter where that asset is, I think you can do pretty well over time.
Yeah, so if I'm allowed to probe here, given that emerging markets are extremely volatile, things change quickly, people scare easily, how do you actually find and attract the right investors where they'll stay the course with you and your strategy then?
Well, that's the hard part. And to be honest with you, I'm not doing a great job. So I only have 4 outside investors. I'm an investor in the fund. And all the people who are invested are ex-colleagues who I've known for about 25 years or so. So I need to go out and, our expense ratio is quite high. And as we raise more money or as our funds become larger, that'll come down a bit. And that's one thing I'm keen to do going forward is to raise some more money.
And do you want to talk a little bit about what you look for in investments? So what do you look in a market before entering? You've mentioned the sort of 3-legged approach. Do you want to explain that?
Sure. So the 3-legged approach, or the trifecta I call it, is looking at the company selection is basically people, structure, and value. If I had any macro overlays, it's very simple. It's just, is that country in a crisis? Is there a possibility that the country will come out of that crisis and will be able to realize our investments? And if we hit those 2 metrics, then I start looking at the country or the stock market. And then in terms of picking stocks, you kind of hit the nail on the head there with the 3 things that I look at. I look at people, structure, and value. So I'm really looking for companies that are controlled and managed by quality people, have a good reputation. They've done the right thing for minority shareholders. And also the structure of their business holdings, not just the listed company, but there are other unlisted entities. That structure is pretty simple and where it's all focused so that the incentives for the majority of the controlling shareholder are the same incentives for the minority shareholder. You have aligned incentives between the two. Because a lot of times in particularly non-Anglo-Saxon markets, there's very many ways where the major shareholder of the company, the controlling shareholder, can extract cash from the listed company to the detriment of the listed company. So that's the structure side of it. That's kind of people that structure are kind of my quality metrics or overlays. And then the third part is just valuation. And I use a lot of long-term valuation metrics. And this kind of goes back to Benjamin Graham. I forget which one, it's security analysis or the intelligent investor, but he would talk about averaging out earnings over 10 years so that you take out the business cycle. And then Robert Shiller came in with the CAPE ratio, which does the same thing, but you not deflate, but you adjust those earnings by inflation. And so I look at that when I look for valuation, both at the market level and at the company level. And typically, if you go into the markets like Turkey in 2018 or Greece in 2012, everything's cheap. You don't really have to spend too much time on the valuation. And in fact, that's where I've screwed up by spending too much time on the valuation, looking for something that's at, 2 times CAPE instead of something at 6 times CAPE. And in a market drawdown like that, almost everything's cheap typically, and it's a good time to just stick to quality.
Yeah. Okay, because one point I want to draw about that is how often on valuation and with crises, how quickly do emerging markets rebound, have you found? So how time critical is it to notice, evaluate, and then map out all these web of structures that, is often common in emerging markets? Like, how time critical is the work sometimes? Like, you spend a few years doing nothing and then everything hits all at once? Just talk me through that.
It really varies. So there's 1 or 2 pages in, there's a great book called This Time is Different. And it maps out the history of mostly fixed income. I think it was bond markets. And when they kind of mapped out financial crisis. But there's 1 or 2 pages in there about equity markets. And they note that equity markets tend to rebound quickly. I think it's within 6 to 9 months. And then the property market tends to rebound in 3 to 5 years. I could be wrong on this. And that kind of coincides with the general economy rebounding. In my own personal experience, it's really varied. So, I've basically been running the strategy for about 10 years, first with my own money, and then about 5.5 years now with the fund I started. And what really got me interested first was Greece, and Greece rebounded really quickly. It hit a bottom in, I think it was beginning of June 2012. And then by the end of the year, the stocks have done really well. They recovered a lot. And the same thing happened in Argentina, where, I went there in just before COVID. I think it was October, November 2019. And the stocks have rebounded pretty quickly after that. Now, other markets like Turkey, you kind of have what they call a double dip, where I went there in 2018, the market went up and then it went down again. And now it's, last year it did really well. So we'll see, but it's really hard to make a generalization. I tend to be a little bit too trigger happy, at least recently. I was in Sri Lanka in June, and we were down about 20% now in Sri Lanka. But I think longer term we'll do well. I just got in too early, and I was too excited about the situation there.
Okay. To continue on crisis as well. So you've mentioned on Graham Rhodes' Longer of a podcast, who's a good mate and a previous guest, that you love to invest in financial crises, but tend to avoid political crises. But how often in emerging markets are those two crises linked when you're looking at them?
Okay. Well, first, a big shout out to Graham. That was the first ever podcast I've done, and we found each other through him. So thanks a lot to Graham. In terms of political crisis, in a financial crisis, you kind of know what's going to happen in a way, or you know what you should happen. Usually it's a lot of financial crisis. And I'm thinking back here to Indonesia, is that over the 3 years they were in a pretty crisis situation, you had a lot of reforms taking place. And that led to the rebound and Indonesia becoming what it is today, and probably even better in the future. And so that's you like to see that. And even if there aren't that many reforms, as long as the country stays pretty open, allows businessmen to do what they want, what they do best. And I think a good business can do well in just about any environment, whether it be a democratic environment or an authoritarian political environment. As long as there's stability and they can get access to the goods and materials that they need, businesses tend to do well. But when businesses tend not to do well is when you have a kind of a geopolitical situation like we have in Ukraine that's just very unpredictable. Or Venezuelan market did really well last year, and I've been getting questions about why I wasn't there. But firstly, I don't know if I can do it. I'm an American citizen, so I don't think I'm kind of the weakest link in the fund. So I don't think we can invest there simply because of that. And also, I just didn't really, it doesn't seem like things are going to change much. Maybe I could be wrong there. But yeah, I tend to avoid a pure political situation, but a financial-led crisis like we're in Sri Lanka right now is attractive to me.
You mentioned restrictions there with Venezuela. So one thing I do want to know is, when investing in emerging markets, how often do you find there's exorbitant restrictions on foreigners owning, investing in companies? Like, the valuations and potential may be there, but it might truly be uninvestable. So how do you navigate these minefields, especially as a one-man band?
I guess a lot of experience and having seen it before. The big one isn't so much investing money in the country, it's getting money back out, particularly getting US dollars back out. So that I'm pretty sensitive on. So, you do things like go with a bigger broker that may have more clout with the foreign exchange control authorities. A lot of markets, there's ways to get in and out through what they call the blue chip swap rate, which is buying and selling the similar asset, the local versus the foreign market. So in Argentina, we get all our money in and out through the blue chip swap rate. And what's interesting in Argentina is that blue chip swap rate was declared legal by the Argentine Supreme Court, I think about 20 years ago. And so there's ways to do, but that's the biggest concern is the currency. So one thing I do follow on the macro side is what the government might be doing to impose currency controls on foreigners.
So if I could talk about the structure side of your investment process, you've written that one of the first things when looking at a new market is just to determine who owns what. So what's that whole process look like? Where do you even start, and how long does it all take?
Sure. So it's so one thing I'd like to do is when I was an analyst, I used to write these what I call the group reports, where you're looking at the market. The first thing you do with that is exactly what you said, where you map out the owner of each, or the controlling owner of each company, you map out the ownership of each company that's listed on the stock market, and you typically start by market cap. And what you find is a lot of the ownership of the bigger companies in each market, they tend to go back to any one of maybe 5 to 10 different families. So, I can give you some examples here. Some of the names escape me, but like in Sri Lanka, for example, the Pereira family is one of the bigger owners of companies there. You have the John Keel's groups, which you have the listed John Keel's companies, and they have, I think, 5 subsidiaries that are also listed. In Indonesia, a long time ago, one of the biggest business groups was Sinar Mas, and they had quite a few companies listed on the stock market. Astra had several companies listed on the stock market. And so that's the first thing I do. And it's a way to really organize a market for me so I can figure out kind of who owns what. And so like in Sri Lanka, I think there's about 300, 400 listed companies there. And if you break that down by who owns what, you really come up with, I think I'm up to about 5 or 6 really big owners of stocks that are major port, the Haley's groups, the Metals Corp group, John Keel's, which I mentioned before. And then you have other bigger business groups and smaller business groups. And so, I think Haley's has maybe 10 or 15 listed companies there. And you start talking to people, do you like this group or you don't like it? And if you do like it, then that gives you a lot of options to look at. If you don't like it, then you can just wipe those 10 or 15 companies off your list of things to look at. So it kind of becomes a process of elimination. And it's a way to quickly that I use to quickly get up to speed on a new market. Like Sri Lanka, or actually, I should say I've been to Sri Lanka a long, long time ago and looked at companies there. But say in Greece, where it was a very new market, I used the same methodology that I used in other parts of the world. And first mapping companies to the controlling shareholder, and then figuring out which controlling shareholders I like and which I don't like, or which are good for minority shareholders and which are maybe not so good for minority shareholders. And then you invest or look at more deeply into the companies of the ones that are controlled by good controlling shareholders.
One location I would like to ask a couple of questions about is Uzbekistan. So you mentioned in 2017 that the stock market there was just dead. It was hard to find brokers, hard to open an account, yet the country had plenty of what you call triple sixes. So a PE less than 6, price to book of less than 0.6, and a dividend yield over 6%. So, which seems kind of unfathomable in mature markets. But could you talk about how you first came across Uzbekistan and what interests you there?
Oh, sure. Kind of get another shaggy dog story, I guess. I had been to Kazakhstan came up on my every month or so. I'll do a valuation screen of the whole world, and I think Kazakhstan came up on my screen as being amongst the cheapest stock markets in the world. And so I went there and started poking around. And this is probably about 2014, about the same time the ruble crashed. In 2014, the other currencies in the ex-Soviet Union crashed, also including the Kazakh tenge. And so I went to Kazakhstan in 2014, or maybe 2015, started looking around. And when I was there, I noticed a lot of Uzbeks in management and middle management positions, tons of Uzbek restaurants. And that was surprising. So asking around why this was so, the response was that Uzbekistan is really the center of Central Asia. The best universities are there. Really smart people come from there. And so I started just kind of looking at Uzbekistan ever since then, kind of stayed in the back of my mind. So when there are political changes that I read about in 2016, when Islam Karimov passed away, he had been there for 20, 25 odd years after the Soviet Union. And you kept hearing every now and then, for the next year, you'd see the odd article about Uzbekistan changing. And then what really got me on the plane was that in 2017, I think it was September, I saw an article, quite a few articles about how the Uzbek som was devalued by 50%. So, if a currency gets devalued by 50% overnight, that's literally a 50% discount on all the assets there for a US dollar investor, at least on paper. And that turned out to be the case. But the stock market so that's kind of led me to Uzbekistan. And then when I went there and started talking to people, I still remember the time people were telling me, one of the government officials was telling me about the reforms that they've instituted over the last couple of years, particularly since the new president came to power. And they were just jaw dropping. I just couldn't believe the pace of reform. And I'd already seen kind of reform in the last 30 years, and the pace of reform and what these guys were trying to do it's very fast and very ambitious.
Yeah, and for the market of Uzbekistan, so reading your post, Inside Corporate Uzbekistan, it's like legitimately mind-blowing, so I highly recommend everyone to read it. But maybe for listeners to understand the market a little bit better, could you just describe the makeup of the Uzbek market and the actual investable market there? Because the statistics there just honestly had me breathless. It's insanity. So could you explain a little bit about that?
Sure. It's just really, what would you say? It's just really small. I have to get the actual numbers. We have, I think the biggest company there that we have is a market cap of about 160 million. And that's been a 5-bagger for us. So, had a market cap of maybe 20 million before, 20, 30 million before. And, we bought in, we were getting dividends. There's been great growth in the company. We reinvested our dividends. So we've done really well there. And they're going through a privatization program now, and it's really frustrating because you see these assets that are being sold, and they're being sold at a really, really low price. They just, people just aren't looking there still. There are a few companies we have a company in Turkey, the Turkish bottler of Coca-Cola. They recently bought their Uzbek Coca-Cola bottler. And they tweaked that a little bit, and now it's growing by 40% per year. I think it's one of the fastest. It's certainly the fastest growing subsidiary area of their business. But I think it's probably one of the fastest growing markets for Coca-Cola in the world right now. In fact, I was just in Tashkent and Samarkand in November, and I didn't see much Coke in the stores. And I was asking about that. I said, "Yeah, there's so much demand for it, they can't keep up with it." So it's only the high-end restaurants and the high-end supermarkets that have access to Coca-Cola. So it worked out so well, knock on wood, in Uzbekistan. But we're still really, really at the early days. And I'd love to have some more M&A people go up there and to take a look around, because the assets are just so cheap. And, it's a safe place. The currency's pretty stable. They're really making a good push to increase electricity supply. Their foreign reserve, I think 65% of their foreign reserves is backed by gold. And if they want more foreign currency, they just go out and mine more gold because they have so much of it. I mean, I'm making it, it's a lot more complicated than that, but there's a lot going for the place. And I don't think a lot of people, it's getting a little bit more press now. but it's just so the asset prices and the economy is so small compared to the rest of the world. It's not showing up on many people's radar right now.
Yeah, easy. So yeah, my closing round, I really enjoy asking, especially for you with a lot of life experience. I'm very keen to hear your thoughts. So what do you think is the most undervalued life experience that university age students don't give weight to? So what do you think is an underrated skill or an experience that you think they should have, or even something you wish you had younger on? So yeah.
Just kind of doing what you're doing, just going out and starting to do something. You learn a lot by doing rather than, you have to study things and things, but just going out and taking more risks. So to give an example of, you asked me things that I wish I had done before. One thing I didn't do was invest my money in the markets, say during the Asian financial crisis. And that was a huge mistake. So I think just kind of going out, especially when you're young, take more risks and do what you do. Just try different things, travel more, travel to places that maybe your friends don't go to or don't make the papers every day, but you find interesting yourself.
Because that's what I love about you and your investment style too. You literally get on the plane, go to these places. You're not just investing from the office in Hong Kong. You're going there, chatting with local vendors. It's awesome to see. And yeah, I'm so jealous, so envious.
Yeah, but that's a big part of the job. I love doing it. It's definitely a labor of love. It's just so much. I was just kind of getting depressed about Uzbekistan because some of the companies that I know, they're kind of doing the wrong thing. I think some of the privatization is not being handled properly. But then once you go there and see the changes over the last 3 years, my opinion changed about 180 degrees because there's so much energy now in that Tashkent didn't have 3.5 years ago. For instance, they're facing a little bit of a power crisis around Christmas time. And one reason is because power consumption, I think, has gone up. I forget how much, 50% in the last 4 years in Uzbekistan. One reason for that is just plain marketing. Tashkent is much brighter now in terms of, I'm writing my quarterly newsletter right now, and one title I'm going to have for Uzbekistan is Bright Lights, Big City, because it's really come alive. A lot more businesses, a lot more marketing. It's really, really exciting to see what's happened in Uzbekistan in the last, 5 years since I've been going there and investing there.
And I'm just curious to know, when you go to these places, and we'll maybe use Uzbekistan as an example, do you have a local fixer, a friend, an ex-colleague that shows you around and can navigate the local language? How do you even get over that hurdle?
It depends on the market. So, in Uzbekistan, it was all me going out and finding somebody who, talking to the local brokers, because you do need a local broker to transact. And then once I found a couple that I liked, I opened accounts with them. And then it kind of helped me with a lot of different things. Generally, but I try to arrange my own meetings now. So I was in Istanbul in September because we have a big position in Turkey. And I arranged all my own meetings there. And I prefer to do that, to be honest with you, for a couple of reasons. Number one, I like to be an investor in the company. And it's nice. It's good not to have a broker. There's some really good brokers out there, really good analysts. But at the same time, it's kind of nice to do my own work. And a lot of times the brokers, they tend to have more of a short-term view than I have and tend to look things much more trading oriented, simply because that is how they make a lot of their money, or transaction oriented. And they also look at, a lot of times they'll just stick to the bigger cap companies that are already big, whereas kind of I want to look at the companies that are going to be big in the future, skating to the puck rather than where the puck is now.
And another general question, have there been any books or people that have been influential in shaping you or your worldview?
Oh, sure. Yeah, there's a great book called The Rise of Earth-Sat's Capital by a Japanese author. I forgot his name, but that's probably one of the better books. It's been very influential to me. It's very dated now, but what he did was he outlined all the big business groups in Indonesia and talked how they fit together. The other one is, I think it's just The Rise of Capital by Richard, I forget his name also, an Australian guy actually. He's based, and he looked at the rise of how companies and groups raised capital in Indonesia way back in kind of the 1960s to 1970s. And those are really fantastic books. And they kind of introduce you to at least they did to me, to the business group concept and how the crony capitalism and how things really work. Yeah. And there's also, we talked about it before, the model, which just came out by Richard Lawrence and the guys at Overlook, is very good, I thought. And of course, the Ben Graham books are fantastic. There's another guy named James Montier who writes about behavioral finance. I think he wrote the Guide to Behavioral Finance. And I thought that was really interesting. No shortage of books to read.
I know, that is true. And for you, what's your plan going forward now? So you mentioned going out, maybe raising capital. What areas are you curious about? Just what's the plan? Walk me through that.
Yeah, I love what I'm doing. My goal is to keep doing it and, hopefully improve on some of the mistakes I've made, and to learn more about the investment process. And then, I do want to raise some more capital going forward, particularly to lower expense ratio. But also, I really do believe that this is the best way to invest, and nobody seems to be doing it. During a financial crisis, all you see is the risks. But 3 or 4 years later, looking back, you just say, why wasn't I doing that before? The same feeling I have about investing in, say, Indonesia or Southeast Asia in 1998 or during the financial crisis. So I really do think it's just a good way to invest. It's not for everybody. There's a lot of headline risk. I'm sure my investors are looking at some of the markets that I'm investing in and just cringing because, even though Turkey had one of the best Turkey and Argentina were some of the best performing markets last year, you still see their economies. Every article you read about their economy is just really, really like, why would anybody want to put their money there still? And so you need the right type of mentality, I think. And I want to make somebody, my job as a manager is to make sure that I have the right people or the investors in the fund so that we don't have people withdrawing their capital and maybe perhaps hurting performance and withdrawing their capital at the wrong time. And basically, you want to make sure that people understand what they're getting into.
Yeah, Michael, thank you so much for coming on today. Really appreciate it. Anything you want to plug, or where can people find you?
Oh, sure. So I have kind of unusual spelling of my last name, so it's pretty easy to find me on social media. So I post or repost a lot of things on Twitter. I like to post things that I don't see other people looking at. And then I also have a blog that I don't write to very much anymore. That's just on the Google platform. And I don't post much on that because just since starting the fund, it's been busy writing the quarterly newsletter and doing all that. And then I'm also on LinkedIn.
Perfect. I'll include links to all in the show notes. But Michael, thank you so much. I've learned a ton. It's been extremely valuable for me, and I think for listeners too.
Hey, Kalani, thanks so much for having me on. I really appreciate your interest.
If you enjoyed this podcast episode, be sure to check out the website compoundingpodcast.com. On the website, you'll find every episode complete with transcripts, show notes, and other related resources. If you want an email notification every time an episode releases, plus my lessons and takeaways from each episode, be sure to sign up to the Substack. So that's compoundingcuriosity.substack.com. Either way, links to all content mentioned today will be in the description below, and you can also connect with me on Twitter @ScarrettKalani. But until next time, have a good one.